Hi traders. In this video, we will follow the concept of Bollinger Bands Strategy from TradingView. Bollinger Bands are extremely popular among traders and are very useful as part of a bigger strategy system. In this strategy, we follow the approach from the internal coding team of TradingView using Bollinger Bands as a standalone system. From the strategy page we read. Definition. The Bollinger Bands strategy is often used with the assistance of other indicators to make conceptual and strategic trading decisions. Bollinger Bands consist of 3 bands total: an upper band, middle band, and lower band. These separate bands are used to highlight extreme prices in a specific security. The upper band is associated with overbought securities, whereas the lower band points to securities that are oversold, and the middle band acts as a moving average. It is common after a lower band has been broken by heavy selling for the price of the stock to revert back above the point of the lower band and move closer to the middle band. The Bollinger Bands strategy specifically profits from this type of occurrence where the strategy demands a close below the lower band. Therefore, it can be determined that buying the breaks of the lower Bollinger Band is a specific way that traders and analysts are able to take advantage of oversold conditions. History. Bollinger Bands were created in the 1980s by John Bollinger. This strategy has become one of the most frequently used tools by technical analysts since its inception towards the end of the 20th century. Takeaways and what to look for. The Bollinger Bands strategy is commonly used to point out oversold market conditions. However, instances may occur when the strategy is correct, yet selling pressure continues. During these instances, it can be hard to determine when the selling pressure will end, and therefore, a protection of sorts is needed once there has been an acute decision to buy. Stop-loss orders are one of the many strategies that were developed in order to protect traders and analysts from trades that continue to ride the band lower than necessary. Limitations. There are quite a few limitations to this strategy, but they often depend on the specific case and how the strategy is being used to track market trends. Price is a factor that does not often rebound quickly with the Bollinger Bands strategy. Although the strategy can often correct itself, this doesn't always stop traders and analysts from experiencing significant losses due to rebound delay. Additionally, as mentioned above, it can be hard to determine when selling pressure will end, and so it is essential for the strategy to be paired with protection that will ensure stability when a trader has decided to go ahead with a buy. Summary. The Bollinger Bands strategy is often used with the assistance of other indicators to make strategic trading decisions based on the status of the market and the position of stocks. When there is consistent seller pressure present, and this pressure is not corrected in a timely manner, stocks then continue to make new lows into oversold conditions. In order to use the Bollinger Bands strategy effectively, it is advised that you have a decent exit strategy, such as stop-loss orders. This is to ensure that you and your trade are protected from a stock that continues to ride the lower band, without knowing at what point selling pressure will end. That is the text from the strategy page. The results we got from it are interesting. Let's look at them. We see a screenshot of Forex, crypto, and indices holding each other's hands. I didn't put these pairs myself, that's the natural order, considering that I sort descending with profit factor and I apply a filter to see only closed trades over 100. The profit factor among these three is nearly the same. It's hard to find the top winner. However, AU.200.AUD using the 5 minutes timeframe, more closed trades than the others, and with the idea that 1 hour, referring to TRX USDT, has 12 sets of 5 minutes, then the winner can be this pair. The other two are not far behind, but someone should take the big font letters at the thumbnail I make. I will not comment on these three. For me look like triplets, one mother strategy, and 3 babies came out of this. Let's see the ranking XLS to learn if we got something extra from this. Giraffe looked for berries in the trees but didn't find any. She was happy to stay in 5th place with average performance in general. The combination of fair win results, fair to good % profitable, and again fair profit factor average created room to put Giraffe at that spot. I'm not a fan of one indicator to do it all, but here we test strategies, and when I find one I can't stand not to putting it a test. Especially the strategies that carry the heavy badge of TradingView. Of course, TradingView sometimes gives you the basics so that you can enhance it the way you want. Even so, a strategy that goes to technicals, with entry and exit rules is within my requirements to test it. I will omit the strategy with a similar name Bollinger Bands Directed because it is the same as this one, with the difference that it gives the option to go long or short or both by a drop-down selection menu. Since we test many pairs and many timeframes, we're not interested for a specific direction. That's why you will not see that strategy in our list, but you will see all the others. If you have anything to say or suggestions for the current strategies or strategies you want to test, do let me know in the comments. Remember, finding an edge to your trading and applying proper risk management and psychology is the recipe for success. Thanks for your time. Sincerely, the trading elephant himself.